Hey everyone, how's it going? So for today's video, we're just gonna do the long-term analysis. We'll start from the weekly all the way down to the lower time frames. There's not much to update with my trade. Everything's still the same, and there's not really much to follow up with the analysis that we've been doing for the last couple of days because we're basically just waiting for the structure to build. So we'll kind of look at it from a macro-ish, a long-term-ish point of view, starting from the weekly down, and we'll see how it's shaping up to be. So, looking at the weekly, Stokes are flatlining. I'm not really a big fan of this close because technically we did take out the other low that we had, and this is still not a confirmed lower low because we would need a green candle close above the opening of it to confirm it, like the textbook definition of a lower low. So it's not looking from a closed candle point of view, it's not looking good. But looking at all these wicks here, I'll take these boxes off. We'll just hide everything here. We'll just look at the candles. So looking at all these wicks, this looks like it's a lot of buys down here clearly. So it might not be reflecting with closes on the weekly because weekly takes a lot takes a long time to close, but we'll see it reflect on the as we go down the time frames. We'll see it reflecting and we'll see it kind of making that curve bottom. So put these back on. We'll go to the volatility chart on the weekly. It's saying these two are basically on the on the momentum side of them. They're both saying that the downside pressure is wearing off. Not much on the volatility. On the RSI and RTSI, I don't think there's any divergences. Yeah, any of these would have already been played out. Like it's all the way back here. So let's take these drawings off. Yeah, so it's like all the way back here before the breakdown. This multiple drives of bearish, couple drives of bullish. The three bullish drives basically played out and got us from here to here. And then the three bearish drives, the three drives of the bearish divergence, basically took us down 50% from top to bottom. So those are already all played out. Not much to see there. RTSI, yeah, still hasn't confirmed the bottom. It's just nosediving. So yeah, the weekly is going to take a lot to start showing structures, where basically all we see here that's positive is these massive wicks and showing some buy pressure at the bottom, but it's not showing any structure yet. We'll go to the 3-day. That's why I like this. I really like this close. Nice bullish engulfing. Momentum still building up. This is the super reactive, less reactive, and the very least reactive. So if the least reactive is actually showing this perfectly just curving up, this is sideways, this is sideways. So to me this is good. Looking good. We basically confirmed a higher low. So I'll take this off. Yeah, so right over here we have basically confirmed our higher low over here. It's the first step to building up a reversal is we need the higher lows, so it's getting better, but obviously not enough to make me bullish yet. And we mentioned before what I would need to see on the 3-day and on the daily chart to be bullish, and that's around like just shy of 50k on the daily and like 48ish, 47ish, something like that on the 3-day. So definitely not there yet. We'll go to the 3-day on the volatility chart. Yeah, these two not saying much. This is good. So we've actually reversed the downtrend. We've actually reversed the down momentum to a bit of an upside momentum, because obviously that bullish engulfing is gonna affect the oscillators. And let's see, is the MACD crossing? So the MACD is crossing, but I like to see more slope on the red, because the green is a lot more active than the red. I want to see the red sloping before I start getting a little excited. Like right now, this is good. This is constructive. I like the fact that it's building structure, but I'm not getting excited yet. So we'll go to the 3-day on the oscillator side with the RSI. We have one. Yeah, this is played out. That drive is played out. Yeah, RTSI still doing the building a structure over here. So that's good, and it's kind of lined up with our COVID bottom and the previous bottom before our last little fake out before we we had the dive in the COVID dump. So we'll go to the daily. I think maybe 2-day. Yeah, I don't think 2-day is gonna show much because yeah, we did just close one. Yeah, we'll look at the 2-day. We'll go from the 2-day to the daily. So yeah, I like this too, and a bullish engulfing on the 2-day as well. Sideways on this. We'll put this on the 2-day on the volatility chart. Volatility, not saying much. We got some momentum here. Momentum's increasing to the upside. Momentum increasing on this one as well. So this is basically doing the good old building the good old structure. We have a low here, higher low here, another higher low here, kind of more like a local low. Same with this one, but this is all. A lot of like professionals will just look at this whole area as being a low rather than just individually looking at them and saying, okay, it's kind of going higher and higher because it's in one cluster. So me personally, I would just look at this as a higher low, and I would consider this to be a higher low but also bullish because of this. It's like a giant wick and basically like a little doji in favor of the upside. That's the way I would look at it. 2-day on the RSI oscillator side. I think these drives are all played out already. Yeah, so not much on the RSI, but the RTSI is. This is good. This is basically making the bottom, doing the curve. I like that the yellow has a strong curve. Yeah, this is all in confluence with everything we've been talking about. This is the structure we've been waiting to see get built. So yeah, it's good. It's good. I like it. Now we will go to the daily on the Stoke chart. It's good that we are above. We're finally above the. We had an open and close above the middle Bollinger Band, so that's a bit positive. Stokes are a bit beat up because of all this. We've had yeah, it's been getting beat up from this in this area right here. Lost a bit of momentum, but it's good overall. It's because it's constructive, and we're looking from the high time frames down into the lower time frames. We can see that it's building structure. So the stutter steps are necessary. 2 steps forward, 1 step back. It's building a structure. So it's yeah, not much on this one, and then we'll look at it on the daily. I believe the volatility on this one was bottomed out. Yeah, it's flatlining, basically. Yeah, flatlining on here. I think on the 12-hour it's actually curling up a bit. We'll check that one out next. And here it's still bottoming. Volatility is still bottoming, not doing much. Momentum sideways, not really increasing, not really decreasing. This one is decreasing a bit, so This is more like this is momentum of the Stokes. So clearly we had the Stokes here nosediving. So obviously that momentum is going to be wearing off. So it's not. I wouldn't put too much weight on this because we do need, like I mentioned, we do need the stutter step, 2 steps forward, 1 step back. So it's still constructive, and the fact that we've closed above the middle Bollinger Band, it's looking good. It's looking good to me. We'll put this chart on the daily, the RSI oscillator chart. Not much on here. These are already played out. RTSI I would imagine is curling sideways. Yeah. So this didn't even like the Stokes got pretty beat up, but this didn't get beat up. This still is showing the strength. So this is why I mentioned Stokes are better for scalping, trading in the range, and this is better for pinpointing macro, long-term trend, reversals, breakouts, all those sort of things. Because you can see right now, this is actually, it's almost like this is looking at the structure that's being built a lot more rather than the momentum of what's happening in the current candles. This is more like it seems like it's looking at it in a structural point of view rather than just, oh, what this candle is doing, or oh, this candle's red, so it like the Stokes like sees a red candle and it just curves down immediately. But this is more like, it seems that it's looking at the structure a lot more. It's pinpointing that in its read. So we'll go to 12 hour Stokes up. That's good. So we are building the structure. We are clearly above the middle Bollinger Band. Looking good. 12 hour on this chart, on the volatility chart, I believe it should be breaking out on the volatility a little bit. It should be curling up. Oh, not yet, not yet. So, and this one is basically bottomed. This one putting a little bit of a, like, the 0 read is good, but the 2, it's like I want it to spike like from this to like above this EMA. That's actually signaling violent moves, sort of. Not really this, like this little tiny this little tiny 2 read. That's just not enough for me. So we'll put it on the 12 hour on the RSI oscillator chart. No divergences. Yeah, just doing the starter steps. Still angle to the upside. They're still curling to the upside. So just looking at the structure, showing the structure being built. 4 hour on our Stoke chart. 4 hours still good. It's testing the top side of our stochastic box, but this can literally go up here and go flatline up here. Like, it doesn't, I don't like reading it like some people when they see it and they're like, oh, it's going to the oversold area, so go short. It doesn't work like that. This has to go above, curl back down, and come down for me to have a short signal. And if this is below, it has to go outside, curl back in, and I look at the slope of the red in both cases. Like, when it curls back in, I need the slope of the red in the direction that I'm trading. And once I see that, obviously at the bottom I long it, at the top I short it. So it's not even resembling anything of a sell signal, and if anything, it's still showing strength. So 4 hour on our volatility chart. Not much, just bottom, very low. Just waiting for that move. Yeah, showing some momentum to the upside. We had some, surprisingly, we didn't crash on the daily close like we've been crashing, like we've been just dumping on for the last couple of days. Like, I think last week, every day, like as soon as the daily close, we just dumped a little bit. Okay, 4 hour on this chart. On our oscillator, RSI and RTSI. No divergences. And this is good. This is still curl to the upside, being constructive. But basically, 4 hours is like the lowest time frame that I look at for analysis. So yeah, looking at what we saw on the weekly, all the way down to here, it's basically painting a picture for me that what we've been talking about, that bottom forming and the little accumulation and the potential for this to go up and test like the 40s, the middle 40s. It's there, but it's not enough to get me to be fully bullish. If anything, I'm looking for this to have my long continue up from here, and basically like if it reaches an area where I'm confident enough that my long is gonna be safe to be unhedged with, I would just basically close that short and have the long continue, and I would have my spot long. And with the total positions that I have open, it would put me at net 2x long, and that is usually like my maximum limit. Like that's as high as I would go, like leverage wise. So I have to have a lot of confirmation and a lot of things pointed towards the upside for me to actually leave it at 2x like that. So I'm just basically waiting to see what happens. We can actually go to the 4 hour, and so basically my I had a spot long from 32.5. I shorted, I believe around here. I market smashed, and then I hedged it down here, little limit order, little market smash. I hedged it with a long. I stayed in my long up to here. At this point where we got rejected, I market smashed out of my long, took the profits that was locked in from here with the short and the long. So I basically closed my long over here, or my okay, now I'm getting confused. So short from here, long from here. Um, Closed my long over here once we started crashing, and then here I relonged again, which I'm still in right now, and I'm waiting to see if this area is going to get taken out, and if it's going to have enough strength to go near this area, which is basically like my entry is like around here somewhere, my average entry price on my short. And once that's confirmed to me that this does have the strength to go up, then I'm basically going to close the short and let the long continue, and obviously let my spot long from 32.5 that I purchased in spot, basically just bought some spot coins. I'm going to let that continue, and I'm going to let the long continue. And at any point up top where I feel like this is weakening, I'm going to basically hedge it again with a short and see how it reacts. But I'm looking somewhere like midterm, I would be looking at somewhere in the 40s. If this continues to build the structure that we're seeing and it continues to go up, obviously not financial advice, manage risk please, and do your own analysis, make your own decisions. At the end of the day, you're going to be making the trade if you do make a trade, and you're going to be making money or you're going to be losing money. So it's your responsibility to be safe. I'm just sharing my ideas on what I'm doing, so please take it with a pinch of salt. And basically, yeah, it's I'm gonna be taking it level by level, and I'm gonna be trading it very, very safe. I have no intention of trying to make a bunch of money really, really fast. I am more than happy with what the market gives me slowly. So yeah. And just a quick note. So I think for the weekends, I think I will be doing it on the daily close instead of early morning, like my time. So this actually allows me to eliminate a lot of the weekend scammy price action. Like obviously for the Saturday's daily close, it's it's still going to be affected by the weekend price action. But if I do Sunday's video on the daily close, Asia market's going to be open, CME is going to be open, so it's kind of going to be more based on the actual real price action rather than the scammy weekend price action. So I feel like that way it makes the analysis more reliable. So for the weekend, Saturday, Sunday, I'm going to be doing it after the daily close, and for the regular days like the weekdays, I'm going to be doing it basically after US market open. So yeah, that's everything for today. I hope you guys have a wonderful day. Take care, be safe, and see you next time.